Hello, I'm Haider Malik, host of the Mehmi Financial Group podcast. Today's topic is in-house rental fleets, leasing solutions for Mississauga equipment dealers. Offering your own rental fleet, excavators, skid steers, aerial lifts can drive new revenue and client loyalty, but acquiring and managing that equipment requires capital and operational expertise. Here's how to structure leasing solutions that make your in-house rentals profitable and scalable. 1. Why build an in-house rental fleet? Recurring revenue. Rentals generate steady month-to-month income, smoothing the seasonality of outright sales. Customer lock-in. Clients who rent from you are more likely to buy when they're ready to own. Market differentiator. A well-maintained fleet positions your dealership as a turnkey partner, not just a seller. 2. Lease structures for your inventory. Operating leases. Term and flexibility. 12-36 months, rental contracts with predetermined rates, equipment returns at term end or renewals for new models. Accounting and tax. Rental income flows through P, Plow and L. If you lease some machines from finance partners, those rentals remain off your balance sheet, improving your own debt metrics. Best for high-turn items like mini excavators and telehandlers that age quickly with heavy use. Finance leases. Ownership path. Lease your fleet over its useful life, 5 to 7 years, with a nominal buyout at term end, capitalizing the asset and amortizing it on your books. Depreciation and interest. You claim full CCA and interest deductions, preserving tax benefits. Nee, something best for core machines you intend to keep in inventory for the long term. 3. Funding your rental acquisition. 1. Dealer floor plan extension. Expand your existing floor plan line to cover rental fleet purchases, drawing against inventory value. Advance rates. 60-75% for new machines, 40-60% for used or demo units. 2. Dedicated equipment loan. Term loans, 3 to 5 years, at prime, plus 1%, amortizing principal and interest to match rental contract income streams. 3. Sale leaseback overlay. Monetize paid-off demo or service vehicles, sell to a lessor and lease back under an operating lease, freeing cash to buy new rental units. 4. Vendor captive financing. Leverage OEM captive arms for promotional rates or deferred payment plans on large fleet purchases. 4. Operational and risk management. Maintenance bundles. Bundle preventive maintenance and emergency repairs into your lease contracts to cap uptime risk and administrative burden. Utilization tracking. Use telematics to monitor hours and condition. Billing by hour ensures you capture full value and predict replacement timing. Residual management. Set realistic end-of-term residuals in your finance leases to avoid steep drop-offs in trade-in values. 5. Pricing and profitability. 1. Daily versus monthly rates. Determine break-even utilization thresholds, e.g., a $200 day rental needs 15 days month to cover costs. 2. Tiered pricing. Offer higher rates for one-off or short-notice jobs and volume discounts for multi-month contracts. 3. Damage and over-hour fees. Include clear overage and damage repair charges in your contracts to protect your asset values. 6. 3 action steps. 1. Fleet needs assessment. Your highest demand rental categories, e.g., compact loaders, articulated boom lifts, and model expected monthly utilization and revenue. 2. Secure funding. Approach your floor plan provider, bank, and an OEM captive to compare advance rates, loan spreads, or lease terms. Select the lowest all-in cost structure. 3. Launch and monitor. Deploy your first tranche of rental units with telematics in place. Track utilization, maintenance costs, and ROI monthly, then scale your fleet based on performance. By combining operating and finance leases, leveraging floor plan extensions or sale leasebacks, and embedding maintenance and utilization controls, Mississauga dealers can build a profitable in-house rental fleet that drives recurring income, deepens customer relationships, and maximizes asset ROI. I'm Haider Malik. Thanks for listening, and here's to powering your dealership's rental success.